So perhaps I'm going to bring some more positive news to your morning, Shery, and that's great because hospitality is a long cycle industry, and therefore we've been here in Hong Kong for more than 60 years and in Bangkok for 150 almost. So we take a long-term perspective, and when it comes to our founding assets in Hong Kong here, the Mandarin, and in Bangkok, the Oriental, we keep investing, and we announce here that both hotels will undergo significant renovation in the next cycle. So we're going to put more than 200 million to really step into the next cycle in the next decade. So I take personally a very long-term view, and I'm very positive about the momentum in Hong Kong, in China, the momentum in Asia overall. And I believe, there are some maybe short-term difficulties, but I believe our clients still look for exceptional hospitality experiences, and this is what we'll provide by investing in Hong Kong and in Bangkok, as you see now on the screen. So this is a very good cycle for us ahead.
But Laurent, many would argue that if you're actually looking at the long-term implications, an economy like Hong Kong that has suffered not only from COVID-19 but social unrest as well might not necessarily be an attractive destination. So why are you doubling down on this economy?
Well, in fact, it is a great destination. I mean, if you look at the numbers for last year, we're almost back to 70+% to what it was pre-COVID, and almost 90% in terms of inbound arrival in Bangkok. So we have a stunning increase in long-haul flights coming to Hong Kong, plus 50%. So we definitely see a resurgence and an increase of tourists and travelers coming to Hong Kong. If you've been here last week, with the Rugby 7 and the Art Basel, you'd see that the city has never been as bustling and active as ever. That's why we put money in Hong Kong to renovate accommodations, to increase the culinary experience, bringing new chefs, bringing new designers from all over the world to help us to create an exceptional experience in our two flagships hotels in here Hong Kong and in Bangkok as well.
Talk us about Bangkok, because of course we have seen the potential of 36% tariffs on Thailand as well coming from the Trump administration. Does that not give you any pause about the future of that economy and just broadly in Southeast Asia, given, of course, the ongoing concerns also about the potential hit to China and Chinese travelers?
So, in fact, that might be certainly impacting the short term. I still believe these are extremely attractive destinations. If you think, just to say an example about the culinary world in Bangkok, in less than 3 or 4 years, there's been more than double the number of Michelin star restaurants, which means that the city is definitely a key capital city of the world for culinary excellence. And we're bringing in our hotel in Bangkok, in the Normandy, we're going to bring Anne-Sophie Pic, who is the most awarded female chef in the world. So you see that we have plenty of confidence to actually bring and continue to shine in Bangkok, as we have done for 150 years. So I'm also confident about the Southeast Asian economy. I've announced earlier last year an investment in Bali. We have significantly redone our hotel in Singapore, and we are investing also in our hotel in Tokyo. So I do see, in fact, Asia and Southeast Asia for the long term still as an extremely important destination for global tourism and global travelers.
Do more investments across Asia mean that you're perhaps funneling a little bit of what could go into other markets? I know that 9% of your total revenue, for example, came from the U.S. last year. So
it's true in a way that we're probably less exposed to the U.S. than we should. We're, of course, looking at expanding in the U.S., but we're expanding very fast in Asia overall. We have announced a second property in Japan not long ago. We are expanding very fast in Middle East, which is a very strong region as far as global tourism is concerned. And we're very strong in Europe as well. So I continue to invest, including in Europe, where we've just taken over a magnificent hotel in Paris, our second hotel in Paris, the legendary Lutetia Hotel. So you see that we are really developing a well-balanced global expansion strategy that will lead the group to double in size in the next 10 years.
And you're still investing in the U.S. You're not expecting perhaps a recession or a slowdown in consumption in that economy in the short term?
Well, I think our guests and the level of ultra-luxury experience we provide, probably our guests will still travel around the world in our properties and in the U.S. We have announced a redevelopment of our hotel in Miami that will close soon and be redeveloped into a stunning hotel and residence in Brickell Key in Miami. So we are definitely continuing to invest in North America as a whole. That includes Caribbean, but that also includes Mexico, which is a very attractive market for the region and globally. So, no, as I said, Shery, we really approached growth as a global growth. Mandarin Oriental is a global brand, of course, born out of here, of Hong Kong and Bangkok, out of Asia, but really has branched out to the world in the last 15, 20 years. Today, we're running 43 hotels and 18 residences, and we have a pipeline of another 32. So we really have a very strong growth program ahead of us. Of course, bearing in mind the ups and downs of regional tourism, but I believe I bring more optimism to your show this morning than perhaps pessimism.
Thank you so much, because we really need that optimism these days. I mean, we continue to hear all this gloom and doom, right? At least it's interesting that you say the luxury segment might survive and might be a little bit immune from what we could see in the broader markets. When it comes to the changes in consumption behavior from travelers and tourists, what does that mean when you have potentially fewer Chinese travelers as well, and the world becomes more bifurcated, whether it's because of these trade relationships or just social and cultural relationships as well?
We have seen an increase of Chinese tourism back in Asia. So in our properties across Asia, we see Chinese tourism coming back, or business travelers as well, so which is encouraging. It's true that Chinese have not yet been back to Europe as they were a while ago. I'm sure they will eventually over time, but this is also why we have properties around the world, and regional tourism is as good as international tourism. So we are providing experiences for Chinese across our property. We have opened a beautiful second hotel in Beijing, a very traditional hotel in Hutong area of Beijing. And believe it or not, Shery, we not only have travelers coming from other regions of China or from abroad, but we have also people from Beijing wanting to do staycation in our magnificent hotel in Beijing. So tourism these days, many things. Guest needs are very diverse. And the role of a brand like Mandarin Oriental is to provide these exceptional experience, whether it's next door or whether it's 10,000 kilometers away.
I was going to say, so do you still see that pickup and that need for domestic tourism within China itself? Are you still seeing that as a key market? Because when we continue to talk about these trade wars, we're thinking that this is eventually going to affect the Chinese domestic economy.
So we do. I think it's a great question. We operate today 10 hotels in China, in Greater China, and we have another 6 or 7 in flight. So showing that we are, of course, careful in our expansion, but nonetheless, for the right destination and for the right product, we are very encouraged by local high-end tourism in China. Chinese travelers are very discerning. They're extremely keen on culinary experience, on wellness, which are a true forte at Mandarin Oriental. And the example of Beijing Tianmen property we've just launched is absolutely on that confidence of domestic tourism, including in China.
The bifurcation of trade routes and the ongoing really tit for tat when you look at how Beijing and Washington are really dealing with these ongoing trade negotiations. Is there any material impact in the hospitality sector when it comes to supply chains, whether it's providing some hotel goods or broader services as well?
I'm sure, Shery, everyone around the world is consulting crystal balls as we speak. The reality is that we don't know yet exactly what it means. There might be an increase in cost for building hotels. There might be a slightly short-term impact on travel from Americans to Europe. But overall, I strongly believe hospitality being that long cycle industry, we will recover from that. You know, luxury, the true luxury is time. So providing great time for guests around the world. And in fact, I really believe we're in the happiness industry is definitely going to be eternal. So I'm taking a positive spin on whatever happens in the world. And even more, when it's gloomy out there, just come with us, have a great stay, enjoy a great meal, and enjoy an exceptional experience with Mandarin Oriental.